first, I want to mention that the demographic, I mean, the whole thing that you look for in student housing is a lot different than what you're going to do in the multifamily, mainly because most of your reliance is on the university. So most of your due diligence, rather than being just on the market itself, is on the university and the health of the university and the growth of the university. So a little bit different on that.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Jeff Greenberg. Jeff is the founder of Synergetic Investment Group out in California. Synergetic's overall strategy is to facilitate investment in value-add multifamily and student housing properties in emerging and growing markets. Jeff, thank you so much for joining us on the show. How you doing, my friend?
I'm doing fantastic. Thank you for having me.
Absolutely. I really appreciate you taking the invitation, meeting with me today. One thing that was very interesting is that, because we haven't covered it yet on the show, is student housing. Like I said, a lot of times I get a lot of questions from investors. So glad for you to take a few minutes to kind of go over kind of your business model and kind of get a little bit deeper to that. But before we kind of kick things off, would you mind for the audience kind of getting a little bit into your background and how you got started in real estate?
Well, my background is more in the IT field. I was a network engineer years back, but got into real estate when I realized that the money I'd been putting away for retirement wasn't going to be sufficient, and I was going through a divorce. So the house that we had all the equity in was going to be going to my ex. So decided it was time to look into other means of retirement. The year was about 2005 when I was starting to look or get involved in it, and it wasn't a great time to be looking at REOs and those kind of things. The market was, as everybody knows, we were in a recession, and decided that looked like multifamily opportunities looked a lot better for me. So I started doing that. About 2007, we started really looking into multifamily properties.
Was there a educational period that you took, or you more like kind of just jumped into the fire and kind of learned on your way? Was inspired by certain, or you had any educational programs that helped you along your journey?
Yeah, starting in about 2007 is when I was looking at educational programs. I was going to seminars. Didn't really purchase our first multifamily until 2010, but so that was definitely an education period. We spent a lot of time analyzing lots of deals, trying to get into quite a few deals until we finally got one in 2010. But yeah, there was definitely a time that we were under some coaching, doing some mentoring, as well as following some seminars to learn. There wasn't that much in the way of podcasts back then, so we didn't have the advantage that a lot of people have now with the multitude of different forums that are available at this time.
Oh, yeah, absolutely. Can you take us through kind of like that first deal? Was it like a smaller deal, or did you kind of jump into the larger stuff that you're in today? And then we can kind of talk about how you got started in the student housing space.
Yeah, that was a small deal as far as what I consider right now. For somebody in the single family world, it might not be as small, but it was a 20-unit property. It was actually 5 fourplexes. So I guess you can relate to that a little bit more, that they were all in the same cul-de-sac. And so we treated that as a 20-unit property. We did syndicate it, which is difficult for doing that with a small property, but we didn't have the money to purchase it, so we did a syndication, and it turned out to be a good opportunity. There was a lot of things that we would have done differently, but it was a good experience. It in itself was a good education.
I can imagine. Was that in your local market in California, or was it an outside market?
No, that was in Texas. That
Oh,
was
wow.
in Harlingen, Texas. So it was quite a distance away.
Yeah,
So
that could definitely be a big experience from going outside of your marketplace. What attracted you to that Texas market and particularly that specific location?
well, we were looking in McAllen, Texas, because I do like McAllen. I think that's a good market. We were having a real difficult time getting a property where the numbers worked. And so this one is about 35 miles from Harlingen, or excuse me, from McAllen. And we looked at that one, figuring, okay, this is going to get us into the market, possibly open up doors for other properties. And so we went a little bit outside of where we wanted to be. And that probably was a mistake on some level. But as far as the educational part of it, certainly helped out.
Mm. Yeah, I can definitely imagine. Did you had a business plan to say I'm going to sell this in 3 to 5 years or whatever, then flip that into something larger, or was it kind of like we'll see what happens and then take the next deal, based off of what it looks like?
No, the plan was to sell in 5 years to build appreciation, which would uh, the big plan was raising rents and then doing rubs, because that's what we were taught at the time, to add value. The problem was the rents were real difficult to raise. We had a lot of kickback. As far as the bill back on the utilities, they were already paying for electric, so it was mainly the water, and there was a lot of resistance to that. The occupancy was at 100%, so there wasn't a lot of value add to add to it. The property was only 3 years old. It was a new property.
Mm.
So we just realized that, okay, we were in a slow growth market and there just wasn't any other value adds that we were able to do to it. And, that was part of our lesson.
Mm. Yeah, that sounds pretty cool. Kind of transitioning now, kind of your larger stuff. So what's kind of like your current focus? Is it 100 plus units, or depending on the deal?
Well, on the market rate multifamily, it's pretty much 100 plus. We just purchased a 225 unit out in Texas. As far as student housing, we rather than looking at units, we're looking at about 250 beds as a minimum. But we go sway back and forth on that criteria.
Mm.
But this 225 unit is a nice size property.
Are you right now focusing on Texas? Or are you looking at other marketplaces as well? Because you mentioned emerging growing markets that you're eyeing.
Mhm. We're looking at all kinds of markets. For the most part, I have a lot of people that I've either met or mentored or just networked and met them somehow, that are looking in all different areas. So I'm open to all different areas, but what I typically tell somebody when they are looking to bring me a property is, you convince me why I want to be there. And, so I would consider different markets, but based on a lot of the facts, the population growth and other aspects of the market.
Mm. And that goes to the same for the student housing. How did you kind of break into that? That's a very not talked about niche. I know several investors do very well in that space. Can you kind of talk how you got into that space?
Yeah, first I want to mention that the demographic, I mean, the whole thing that you look for in student housing is a lot different than what you're going to do in the multifamily,
Hmm.
mainly because most of your reliance is on the university. So most of your due diligence, um, rather than being just on the market itself, is on the university and the health of the university and the growth of the university. So a little bit different on that. As far as how I got into it was kind of a rather strange thing. I had an intern, a guy that was a college student that was about 19 years old, and he was looking for deals for me, and he found it. And um, we looked at the numbers, went over the numbers, went over the market, everything looked good. And so we made offers on it. He didn't want to tell me where he found it until after we closed on it, because I found out later that he actually found it on LoopNet, which is, so there are deals on LoopNet. The advantage that we had is the seller was beat up by two other buyers prior to us. And so the price that we got it at was way below what they were originally trying to get.
Mm.
So we were able to get a great deal on that.
Very cool. And it's like, what is the type of stuff that you had to do with it? Was it older building and you kind of had to upgrade? And what's kind of like a typical type of rehab project you do on the student housing?
Well, first of all, this one, there wasn't that much to do. This was pretty much a property that's been 100% occupied for, way back. In fact, the 4 years that we've had it, it's been 100% occupied. And in fact, actually this semester was the first one where we actually had some vacancies, and we're actually doing some Airbnb with some of the units, mainly because there's a bunch of new products that came online. But this particular property, that the original one we got, it was actually 8 different properties. It's not an apartment. It's actually, I believe we got two singles, 1 duplex, 4 triplexes, and 1 12-unit property on this that we treat all as an apartment complex. So the rehabs on those, it was basically the same as you would need on a regular fix and flip. Nothing special on those. My Georgia property that we bought I think almost 3 years ago, that one was, even though it wasn't an old property, it was built in 1999, and the exteriors were fine. We practically changed every surface in that entire property. That one, we painted everything, redid all the floors, redid the kitchen, the bathrooms, and did new fixtures and everything. That was, just pretty much total rehab on that one.
What's kind of like is it kind of the supplies that you use for those units? Is it more wear and tear type of ones, or, I mean, because I'm just thinking in my mind, students, and then you're going to have some that are going to be there for a year or semester, or, so what kind of stuff are you kind of putting? I'm obviously not going to be putting like high end finishes and things like that. And then also my next question would be kind of, is there a cap on the rent? I mean, I know that it, kind of differs a little bit, but as far as kind of student housing, does that make it much difference than market rent apartments?
Well, let's start with the type of stuff you put in there. Certainly, you're not going to put the high-end amenities into a student housing because they don't care, that much for it. But you want it to look nice and you want it to hold up. So the flooring and stuff, you want to have flooring that you can, change out a piece of it if you need to. So that we do the floor, the laminate, where if a piece gets ruined, if they get cigarette burns or scrape it with their dragging their furniture, we could take one piece out and replace it. There is more wear and tear, and so we do want to put things in there that will hold up. The Georgia property where we got the furniture in that one's a completely furnished property. The furniture is stuff that can be abused and not show anywhere. Most of our stuff is wrought iron and in that property. We actually did have some football player that we haven't quite figured out what he did, but somehow he did destroy a bed. I don't know what he was doing.
A crazy night or something. Yeah.
Yeah, I guess. But for the most part, the furniture really needs to stand up to misuse. Other than that, we haven't had that much in the way of problems of abuse. Sometimes you get, liquor stains or wine stains on carpeting, or we had irons that were, an iron that was put on a carpeting instead of on an ironing board, and it just melted the carpeting. So things like that, but nothing major, and their deposits all cover all those things.
Who is is it a mix of say student athletes who are getting funding from the school, and then others that are say the parents are guaranteeing that rent?
It depends a lot on especially with my different properties. My Georgia properties almost all financial aid. It's a lower economic area, so that pretty much we're relying on the financial aid. My Ohio property is an upper middle class property, so it's pretty much all parents. There are athletes that are on scholarships, so we do get some funds from the scholarships. But it just depends. It depends on each different property. My Arizona property, I think it's mostly parent funding.
What's kind of like the value play there? Because I know with some multifamily, sometimes you leave a little bit of meat on the bone to sell it to the next buyer at a premium. For student housing, does that have that component to it? Because typically you're having most of the time 100% occupancy when you're or you achieve to during the school season. Is there any component like that as far as kind of selling it at the end of the business plan?
Yeah, absolutely. You're always looking for a value add, and that was the lesson I learned from my first property. As far as you need the value add if you're going to get the kind of return that you're looking for your investors. So typically on your student housing, you want to increase the price per bed on the rents, or increase the occupancy. The Georgia property that we bought it at 30% occupied, and now we have it at 100% occupied. There's still probably $50 a door left on the upside on the rent. Maybe it'll even go higher, mainly because we have very little competition in that market. But we're actually selling that property. That one's on the market, and there is a $50 a bed upside on that market, which could equate to over $1 million worth of added value. That if we don't sell it right now, we'll add that value ourselves, and continue with that. But we, as you said, we did leave the meat on the bone, so it will give something for the next buyer to take that opportunity.
Talking of the competition, how does it work? I know they got the school season, finite time to get fillings of any empties. How does that work? Do you guys are constantly sending out ads and different things? Where are you guys marketing to get tenants?
Yeah, the thing with the student housing, you definitely have a lease up window. It's not where with your market rates you can say, okay, well, we didn't get somebody this month, we're going to do this and get somebody next month. In fact, I just got off the phone a little while ago from my property manager from my Ohio property, and she's talking about that she's already getting inquiries for people that want to rent for the school year 21-22. She's also renting for 2021, and right now we're in the 19-20 school year, 2019 2020. So it depends. In that particular property, we get people that are looking very early. It just seems to be that demographic of clientele. We have others in my Georgia property where the window may be much closer to the actual school year. When we first got the property, we were getting people coming in after school already started. So it's going to depend on the particular market, the particular school. But yes, there is a definite window. And if you miss that window, there's a possibility that you will have a vacancy for the whole year, that you're not going to pick it up, a couple months down the road.
Yeah, that makes sense. As far as kind of the property management, you guys are self-managing, or do you guys have third-party management?
We always have third-party management.
So as far as kind of the educational stuff, are a lot of these property management that you talk to in the area when you're kind of looking for a partner in those areas, are they equipped to be able to handle, the marketing and the kind of constant need, or I don't know if it's constant need per se, as far as kind of these properties?
Well, that's a key issue. And that's one of the most important things you need to know about student housing, besides the time window, the lease up window, is the marketing end of it. And most property management companies aren't prepared to do the type of marketing necessary for student housing, because it's much more time intensive than your normal multifamily.
Yeah, I can expect that. Absolutely.
Yeah, I mean, it's not just Craigslist and apartments.com. It's going to the campus. It's having a table at the campus during different events, going to all different events, putting ads in the school magazines, finding out when all the school activities are going on, where you can put advertisements in the different event flyers and different things, talking to the coaches, trying to get the athletes into your building, or the sororities and fraternities. So there's a lot more that has to be done. Getting a Facebook page, being on Twitter, doing Facebook Live pictures of the property and what's going on the property. There's a lot more intensive marketing than you normally would have.
Is there a big value play for new construction in near universities, or is it more just kind of picking up some value add based off of your business model and your objectives, picking up some value add type of deals, existing student housing, and then improving it? Or do you guys also venture into looking into new construction?
There's certainly a value in new construction. That's not something that we've done yet. But yes, absolutely. In fact, we sometimes will feel the pinch of new construction coming on board, which will affect us and affect our properties. But yeah, there's a great value in putting in new properties, depending on the location, if it's close to the campus. As I said, we haven't done that. We've done more of the value adds on existing properties.
Very cool. Yeah, I like that a lot. It's very interesting asset class, and starting to learn a little bit more about it. You just kind of uncover a little bit more. As far as kind of the future, is it more just kind of looking more into building your portfolio on the multifamily and the student housing side, or you also guys venture into other asset classes, or where do you kind of see your business going into the future?
At this point, it's mainly the student housing and the multifamily. I wouldn't mind getting some self-storage, but I really haven't looked closely at that. I know some people that are getting to mobile home parks, but I really haven't investigated enough and educated myself enough. So at this point, I have a great expertise in the multifamily and the student housing. So, I continue to work in that direction.
You had mentioned pre-call that you do some mentoring and kind of coaching for students. Can you kind of talk about your program, what it entails, and things like that?
Well, it's a pretty informal program that I do. I have a couple of coaching students that I work with, and help them along the way as far as learning, the ropes and finding out what their needs are. And then a lot of times my students will go out and find properties and evaluate properties, and they may be properties that they can't handle on their own, so they'll bring them back, and we can do the deal together, that I can help them get started by doing a deal with them and them learning through the process. That's probably the best way to learn the process, is to actually do it, to
Mm-hmm.
actually go through the steps, to go out and on a due diligence trip and talk to the brokers and the property managers and the city offices, and learn by actually doing it. So pretty hands-on program.
Yeah, that's what is key. As I had a lot of mentors throughout my career in different real estate aspects of my life, and like I said, you can always attest to kind of someone that kind of there to help you navigate that process, especially when you have so much experience doing it and boots on the ground and stuff, and offer to kind of work with the students to kind of get the deals done with them. So that's great to hear. What's kind of like a typical work day for you, and do you have any special morning routines? What do you kind of do?
Well, it depends on the day. I try to get 100 miles a week in on my road bike, and then I'll come back and walk my dog, or on days that I don't ride, we go out in the morning and usually take a nice walk. She likes to get her exercise.
Yeah, she's
And
waiting for you.
she's in their back. You can see her in the back waiting for me. But I'll take my meetings. A lot of the stuff I have is in different time zones, so I can get my morning meetings in. Talk to a lot of different students. I talk a lot to investors. My evenings are usually out running around at different networking events, talking to a lot of investors. Most of the stuff I do nowadays is the investor relations part, bringing in the funds. Once I don't do a lot of searching for properties on my own. I have other people that are doing more of that. So as people bring properties to me, we decide whether or not to go ahead with them and go to that end, and then we raise the money to do the deal.
What's the most effective thing you did to kind of engage with investors? Is it, like meetups and talks and things like that? What kind of work best for you?
As far as investors, I go to a lot of different meetings, a lot of different seminars. Podcasts also are great. I've met a lot of people on Bigger Pockets that on some of the writings that I've done, just comments I've made on different forums. But my first podcast with Bigger Pockets, got a lot of attention. But I do all different things: podcasts, networking, one-on-one conversations, all kinds of activities to find the investors.
Yeah, it's just the key activity, just, kind of just being out there and kind of talking about your business and the benefits and stuff. Like I said, it's student housing stuff is a very interesting niche. I get a lot of questions about it. So I wanted to find the expert. So I would imagine, people will reach out to kind of learn more, or at least kind of continue that discussion to learn more about that. But Jeff, so what is you say you're most grateful for?
Well, I have to say I'm most grateful for my family, my health. I'm enjoying life right now. I retired from my regular job a few years back, and I'm doing this full time. And I'm pretty much enjoying life and taking it as it comes.
Beautiful. How do we get in touch with you?
Well, you can get my email, which is jeff@synergetic.ig.com. That's SYNERGETICIG.com. You can get a hold of me through Bigger Pockets, or go to my website at www.synergetic.ig.com. The same spelling.
Awesome. Yeah, we'll make sure to have that in the show notes and put it into the podcast description as well. Jeff, it was a pleasure to speak with you, and thank you for kind of uncovering the student housing market and your business model and kind of how your mindset is. It's great to connect with the different investors in different markets. Jeff, have a blessed day, and we'll look forward to connecting with you again soon.
All right. Well, thank you very much. It was fun going through this.
Absolutely. Take care. Have a great week.
All right.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.